This is the best investment of the zip codes in the United States by me, Michael Noel. What makes a good investment? Low risk, because you don't want to invest and then lose your money, and high return, because if you're going to spend a bunch of time investing, then you want to make a lot of money. So the lower the risk and the higher the return, the better the investment will be. And this is in terms of a person who's flipping houses or remodeling houses, just sell them at a profit. So I'm building this for businesses that do stuff like short-term arbitrages or buying and selling. House flippers or people who are going to have 1-year leases on buildings, but anything longer than that is too long. And that's because the housing market is risky and my model has a higher error rate than the predicted return. So the investor has to buy for less than fair market value and create value to make money without risking too much. If you buy at market value, there's too much risk that it won't go up. And so investing in risk, I lowered the risk in a few different ways. I first filtered only the top 5 long-term returns per state. So whatever the best zip codes were per state as far as long-term returns, that's the ones that I sampled. And I removed zip codes with negative future predictions and only ones with a low training error, and then I filtered by which ones were the best. And here is a couple of charts. The median home value price change per zip code in 1 year. So this is the 1-year prediction. The best was about 12 or a little bit under 12% increase. So that's not that good because the error rate is about 15% or under. So you can see the price change is not very good. And then for the 2 years, it's even worse. The top one is less than 8%, and that's not per year, so that means about 4% per year if you invest for 2 years, but in 1 year you'll get more like 12%. So that means that from the first year to the second year it's going to go down. So that means the market's good for only 1 year. So the 1-year investments were the best, and the 2 and the 4-year investments were not even worth half as much. And here's a chart with the error rates. The top ones are a little bit over 14%. A lot of them are near 10%, I would say, is the average, which is about the highest returns that you could get possibly. So some suggestions that I would make to the businesses would be to only buy undervalued houses and properties and fix them so that the house is worth more than what is spent on fixing and buying. That's obviously what you would do, but these markets, the ones that I'm predicting, are the ones that have the least amount of risk and the highest return possible. So even with the error rate on my model, these ones still are dear